Hello everyone, let's have a look at the market snapshot for today. The Indian markets are doing very well, very strong participation. If we look at the numbers, we had close to 300 stocks for the advances against 200 declines. The best part is I think this is the fifth straight session wherein the advances have been more than the declines. Uh, the leadership new highs. I think second straight session wherein we got double digit new highs. We had around 30 new highs today against 487 new lows, again, which is good. Breadth improving significantly. The best part, it is sustaining above 20 EMA, almost touching 400 stocks, 370, 360 odd, above 50 EMA, just over 300, close to 350, 340 stocks, above 200 EMA, just sub 300 stocks. So pretty well there too. The best part, all these numbers are sustaining. So that's the good part about the Indian markets. If we look at the structure of the chart, this is Nifty 50, just over 50 EMA, trying to hold, trying to sustain, trying to rise, which is like a very good, I would say. Like I have been saying, these are very critical levels. I would want somewhere here. It hovers. It stays above this 50 EMA for maybe next coming 5 to 10 sessions, and I think that should really do things well for the Indian markets. 500, very good chart. Like, I mean, this is what maybe a bullish territory looks like. The 50 MA had become flat, very long consolidation around about these levels, and now it is trying to break this particular box, if I may say. Again, I would want here that it just sustains here, hovers around these levels, and I think that would really help the markets. So pretty good going for the Indian markets. No surprises on the trend front. Everything has become bullish. Nifty 50 remains bullish, trading above 50 MA, participation very strong, breadth is strong. Nifty 500 bullish, trading above 50 MA, participation strong, breadth is strong. So overall, very good market, very good sentiments. Bulls are really coming in. Very good overall structure for the market. US markets weak, I would say. I think I've been cautioning about this market since 5th of June. I think that is when I started that I'll be cautious about the US markets. And like when the rise happened between this last Friday and Monday, a lot of people felt it might make a new high, but then I had indicated about those macro indicators which were not favoring that rise. And now, like yesterday I said, these new highs are just getting made to hand over the tops to the retailers, and that is exactly what we are seeing in the market. The advances, we had less than 100 advances in S&P 500 yesterday against 400 plus declines. I think brutal numbers, I would say. If we look at the chart, everything is bullish about that chart, but just look at these numbers. uh, Leadership new highs, close to 10 new highs against 490 new lows. Breadth above 20 EMA, around 270 to 80 stocks, above 50 EMA, 270 to 80 stocks, above 200 EMA, almost touching 300 stocks. I'll try to explain you all. So like, see, when stocks have made new highs, the first point of resistance for them would be 20 MA. So basically what is happening now is a lot of stocks, that means, have gone below 20 MA, right? For example, let's assume in S&P 500 there were 100 stocks trading above 20 MA. So now that number has gone to 80, and now that those number of stocks remain above 50 MA. So 50 MA looks strong, but if you just try to understand, the fall would happen from the highest EMA towards the lowest EMA, and that is the reason we see the highest number of stocks above 200 EMA. The best would have been if we had the highest number of stocks above 20 EMA, but right now it is above 200 EMA. Although 200 EMA is a bullish indicator, but you need to just go beneath the layers. Only surface level understanding of the markets does not helps a lot. So that is the reason I'm trying to explain you this. Look at the charts, beautiful charts, all everything bullish about it, nothing wrong about it. But like I said, honestly, I have even I think I'm left with only two positions in the US market. I have not added any new position from I think 5th of June. My last position was with Monster Beverages. It is still open till the time my trailing SL doesn't hits. I'll just continue to be holding that. S&P 500 just mirror image of Nasdaq. Not like everything bullish about the chart, but then yeah, we need to be cautious. Russell 2000. This chart looks a little more bullish if you see. Yesterday, it made a like it closed above the day before yesterday's high, so it was little bullish, but again I'll be very cautious, not trading it for sure. Let's look at the numbers, what they are saying. uh, Nifty 50 is trading below 50 MA, and then the participation has become weak, the breadth has become weak. S&P 500 above 50 MA, participation weak, breadth mixed. Russell 2000 bullish above 50 MA, participation weak, breadth mixed. Like I said, see what all is happening. Everything has become volatile. Somewhere like the trend is supporting, but the participation is not supporting. Somewhere participation is supporting, but the breadth is not supporting. So it has just become volatile. So the best would be just to remain cautious about this market, and I would say just don't trade it. Macro, 10-year yields rising, dollar rising, VIX around 17, which makes markets neutral. BTC bearish, gold bearish. So yeah, like I would say this is basically a risk off sort of environment, so it's better to remain in conservative kind of asset classes, and my go-to for the US markets would be US yields. The scoreboard, India looks strong, US I would say avoid, macro looks neutral. The takeaway for the day would be India strong recovery, breadth participation improving significantly and sustaining, so pretty good going there. US markets for me remains avoid. Dollar yields continue to rise, moving to yields won't be a bad idea. Bitcoin, gold remains weak, suggesting risk appetite is subdued. VIX around 17, indicating no signs of panic. So yeah, the takeaway would be for the US markets, I would say maybe considering moving towards yield is not a bad idea. For the Indian markets, very very good. Like if you my index point of view, I would say Nifty small cap 250 is looking good, IPO index is looking good. Though in fact, I think yesterday for the numbers for Nifty 50 are also very very good. So there is no pocket which is not looking good, but I think the first movers were Nifty small cap 250 and Nifty IPO. So I think that is where the major strength lies. So maybe being into those indices might be of little more help. Yeah, that's all from my side today. I hope you all found this useful. Thank you so much and have a good one. See you next time.